Hey, it's Michael Saul with the Stock Market Trading Watch List for Wednesday, December 21st, 2011. So I'm going to start today with the S&P futures contract. And the reason I'm starting with this contract is it's the only, symbol, I guess is the best word to use, that TradeStation has right representing the S&P. All right, the SPX is showing us starting down here from where we closed on Monday, and the SPY has a tail. I don't know why, but it has a tail on it. So the S&P, the day session only, the S&P futures is giving the clearest picture. All right, so let's take a look at what happened on Tuesday. And, I've been watching for a bounce here. I've been watching for the start of a holiday move. And the real question is, is this the start? Yes. Now, the second question is, I should have said the first question is this the start? Yes. The second question is it the end? And no, I don't think it is. But we'll talk more about that as we go through the charts. But, this definitely could be a one-day wonder. We could go right back down. I don't think we're gonna. I think that we have at least enough in the tank to make it to the 200-day moving average, if not this swing high here. And we'll talk more about that with the when we look at the other charts. Okay, so I don't want to get ahead of myself here and say, okay, here we go. We're gonna just rock it up into the end of year. Yeah, there's nothing really saying that just now, but this was a really sweet day. S&P up 3%. I think the Russell was up over 4%. We'll see that when we get there. But real quick, I just want to talk about this chart formation. This is known as an ouch opening. This is a Linda Raschke term. Now, I may be getting the rules a little bit off because I can't find the book that I have where she describes it. I don't know why I did this. Okay. But let me just talk about what I think it is, and it's close enough. All right. This is when we close in the lower 10% or the higher 10% of the day's range. Okay, so in this case, we closed in the lower 10% of the range on Monday, and then we open up the opposite end of the range. So, for example, an ouch opening to the downside would be if we closed at the upper end of the range and opened up the next day at the lower end of the previous day's range. But in this case, we closed near the lows, right, at least in the bottom 10% it appears, and then we gapped up and opened at the highs, which was the opposite side of the range. Now, great. That's great to talk about now at 7 o'clock, 7:07 actually, on Tuesday night. But how does this help you during the day? Well, we had the gap up, and I was looking for a fade. All right, I thought that we were going to get some sort of fade. I was hoping, which is a horrible word, that we would get a fade back down, take out the lows, and then start an advance. But it wasn't to be. Now, once not only didn't we fade here, but we saw some early on piling on coming into the market. And I want to show you what that looks like here. So here's the 5-minute S&P, and you see we gapped up here. There was no fade, and then boom, 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 boom. 3 nice size candles right away, right? We opened at 17, and we were 10 points higher in 15 minutes. Then we just stair-stepped, and this is just the strongest type of market. We build a base, we pop. 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 We build a base, and that's how we finished up. All right, so I can't sit here and tell you, whoa, you should have known it was an ouch opening, and you should have never tried to short. I mean, look, I saw it as the potential of being an ouch opening, and I still took a shot looking to take a fade. Now, what I thought was interesting on the day was that we only really moved 10 points above, we didn't even move 10 points above the first hour's range, which in my opinion is definitely not the norm on trend days. Usually what will happen is we'll get a gap up, and I was talking about it on my blog and on the Twitter stream, how I don't know if we gap and go, but it looks like we could get a gap and hold. So what will happen is we'll gap up, we'll hold, and then we'll form the first hour's range, and then we'll break out later on, either right after 10:30 or a couple, maybe 15, 20 minutes after that, and then we'll really see some nice trending action, and then we'll break out late day, and we'll see that expand as well. And I mean, I was looking for us to break out late in the day. I thought we were going to get a squeeze into the close and try to test the 1243 number basis the S&P futures or the 1250 number, but it wasn't to be. We just chopped it out. But if you see here, this is the first hour high is right here. Okay, so that's 1229.50. Nope. Yeah, okay, 1035. Right. So you could see here the high break would be 1229.75, and we only went to 1237 and a quarter. I'm not sitting here saying, oh, that's nothing to sneeze at. Sure, it's still whatever it is, 8 points, almost 8 points, whatever it was. But usually we start to really see the range expansion after we break out above the first hour's high. So anyway, I don't know if I just wasted 5 minutes of your life with that, but just something interesting that I was noticing. So here is the cash S&P market, and like I said before, it doesn't look like this because this has us opening where we closed. But overall, okay, where we closed is, I guess, most important when you're looking at the cash index. But so we're back above the moving averages, and like I except the 200, and like I said, these moving averages I didn't expect to really come into that much resistance because they were grouped together rather than trending strongly in one direction. And then we have the 200-day moving average and the top of this consolidation just above. This is going to be important in my opinion. And the reason why is that we've been pushed back 3 times by the 200-day already. And you could see here we made lower highs. Now we made higher lows. So who's going to win? All right. I don't think we have the all clear signal to just rip it up from here. All right. Is it possible that we can get a nice, beautiful breakout and go to this 78.6% retracement into the year end, maybe even higher? Yeah, it's possible. But right now, I think it's one day at a time. And I'm looking for us to run into resistance, at least for a stall at the 200-day moving average. Then maybe we pause a day or two, and then maybe next week we try to break it out. Now, I don't know if that's going to happen, all right? I don't know if we're going to rip it right through the 200-day or if we're going to turn it right around and push back lower here, all right? I was coming in looking for residual weakness, and then I was looking for support to come in and for us to try to get a bounce. Okay, that part didn't happen, which is fine. I mean, the market doesn't take its cues from me, okay? I'm not really, the market doesn't ask me, hey, Tiny, what would you like us to do today? Like some of these super gurus think they actually, reign over the market, and they just really don't. I mean, most of them are absolutely clueless, all right? So I wouldn't say I was clueless here, but I was definitely looking for something else, all right? But, let's see if this is the start of the holiday rally, and let's see what we do when we get to the top of this consolidation / 200-day moving average. From there, we'll be better able to judge what's going to happen. I would love it to slam in, consolidate, and then push through. But like I said, I don't know if I'm going to get my wish. All right, so NASDAQ 100 up 3.5, nope, just 3%. Okay, I thought it was 3.5 for some reason. Has the 200-day also, but the moving averages are just, look like a bowl of spaghetti here. We're in and out through the moving averages here, so I don't know if it's going to hold as a serious resistance here on a test, but something to watch. Okay, the Russell was the leader for the day, up 4.16%. I mean, this is a time where the small caps usually outperform. I'm going to change this trend line to look like this. So that could come in as potential resistance. And then above that, we have the 200-day moving average. Let's go through the sectors real quick. Okay, semiconductors up 4.5%. Nice turnaround after this expansion through this trend line. And now the next day, it's right back above it. Definitely given, I've been saying this for a couple of weeks now. The swing traders that are looking to make their moves at the end of the day and go with the day's action, okay, not fading the day's action, going with the day's action, are definitely being thrown for a loop here, all right? I mean, just look at these. This is a nice day, closed at the highs, and then boom, right? Up, closing, looks like it's going to break, boom. Up, okay, it was just a one-day pause, boom. And the same thing here. This is the opposite way. We're down, now boom, we're up. And it's just absolutely brutal. Bank of America saved for the time being from being under the $5 crowd. Pulled in volume-wise. There was definitely more volume when it was breaking 5, or I don't know exactly when it was breaking it, but as it was going below 5 here, and you can see here only 239 million shares traded. I say that in jest. Up 4%. Back above $5 here. Let's see if it's going to try to stabilize here. Northern Trust was one I was watching. If the banks did get a bounce, it did not break out here. Up 3%, but did not break out. Here's Citigroup. Here's JP Morgan. And they're all going to be putting in nice days. So JP up nearly 5%. Bank of New York. Okay, up 5.33%. I mean, look, still got a lot of work to do. I know I ripped through these charts a little quick, but here's Citigroup up 4.63%. That chart looks bullish. I mean, not to me. So we definitely have our work cut out for us here if we're going to try to get some of these stocks rocking and rolling. Even JP Morgan, I mean, all right, great, up almost 5%, but I mean, still looks like it's in this range, and still looks like it's been, still in this potential downtrend here. I mean, still potentially in this downtrend. There's no potential downtrend. It's an actual downtrend. All right, here's broker-dealer. Nice day, up nearly 6%. Goldman, stretched out, but only up 3.75%. I mean, I know, only? Well, yeah. I mean, when your sector is up 6 and you're only up 3.75, that's not really good. Okay, here's Legg Mason. All right, here's Morgan. Now, I'm not calling this rally BS, all right? But, I mean, look at this chart. You're telling me, yeah, okay, it's a good day. Still under the moving average. It just paused a little narrow range day. I mean, I'm not calling BS on this rally here, all right? I think we have a chance to put some, at least get up, like I said, to the top of that range. But a lot of these stocks are far from out of the woods. All right, so I mean, to try to get bullish across the whole market, definitely, not in my opinion what I'm seeing here on the charts. All right, here's gold, right into the 200-day moving average. I'm watching that here. If it fails here, it could go right back down, retest those lows. Here's silver, there's SLV, not really doing much. Here's oil. I didn't look at this yesterday, but had a nice pop here, but right into the 200-day, and also these down-sloping 10 and 20 EMAs. All right, and you notice this, I don't know why I had this one drawn in, but it came to almost a perfect measurement of that. It went a little bit below it. All right, let's look at some of the glamour stocks here as we're going on nearly 13 minutes. Apple, just gorgeous. And yesterday I talked about this being a consolidation, but it not necessarily being bearish. Okay, why? Well, because it was in the middle of this range for the most part, and it could go either way. I mean, it just gapped above and just trended all day. I mean, this was just an absolute monster Apple. You see, it gapped up, and then right here. Now, look at what I was talking about with the 1030 move, right? This is a classic 1030 breakout. Right, here's the high, and then boom, and then we just continued to grind higher throughout the day. But we had that nice push after 1030. The S&P didn't really do that. Not saying it was obviously, like I'm saying, I don't think it's a fugazi rally. Okay, I think it's still an okay rally to watch, but I'm not overly excited that all right, here we go, we're just going to rip it up here. I think if we get to the highs of the range / the 200-day, that's the time to reevaluate. All right, Amazon, not a good day. Yeah, up at 1.75%, but I mean, still below the moving averages and still acting like crap. And I was looking for us to push down in Amazon first, come to maybe the middle of this wick, and then get a bounce. This is not looking very good, so this will have to change. Research in motion. Yeah, I guess it's not bottoming out anytime soon, right? But nice pop here, and looks like after hours it was up another point. So hold on 1 second. I didn't see that news. All right, I'm not seeing this, but it was crushed in the daytime, and but now it looks like it's gapping up after hours. So we'll see what happens here, but it doesn't look like a bottoming pattern to me. All right, Visa, really nice push. Okay, this one broke Friday. and then continued Monday, even in the face of the down market, and then Tuesday just ripped it up here. So seeing if this one can get to 105 as the next target here. Las Vegas Sands, all right, still in this bigger channel, and then the smaller channel within the channel, all right. Ford, boom, yeah, I mean, up 3.29%, but no big deal there. Let's look at Intel. Okay, Intel, nice bounce, but now into the down trending 20 and 10-day moving averages. This is a 20 exponential, so that has to be watched. IBM, yeah, nice pop into the 20 EMA. I mean, looks like it's down after hours. I think Oracle got smashed, right? That one I did read. Yeah, Oracle got killed. So it's going to be trading. Let's see. Looks like it's trading right around here. We'll see where it opens. All right. So I'm going to be looking for early weakness for a potential fade to see if we can get some continuation up here. But for the morning, I'm going to be more focused on two-way trading, which means if we gap up, I'm going to be watching that for a potential shorting up. And after we push down, I'm going to be watching that for a potential reversal with a go long scenario then. And if we gap down first, okay, I'm going to be watching that, like I said, for a fade, and then seeing if it hits into resistance, and watch that for a possible shorting up. All right, that's for the morning, and then in the afternoon, we'll see if we can get some continuation to the upside. But as of right now, it looks like the holiday rally has started, and the second question of, is it already over, or when will it be over? That remains to be seen. But first things first, the top of this consolidation and the 200-day moving average. Okay, any questions, feel free to contact me, Tiny, at stockmarkettrendsx.com. Have a great trading day Wednesday. Talk to everybody again on Thursday.